Okay, so what's the silver lining for the looming stock market crash? We would just use the price structure and also the market breadth to construct a scenario. So let's take a look at this. So previously, I have updated in the Telegram group, started on probably 14. So that's just right after we have seen this breakdown bar. So I want to summarize this with judging the market by its own action. So is the highlights here is the summary. Spike of volume is a key, and also the previous accumulation zone here, accumulation on the way down, failed to hold the supply. So definitely favors the bearish case after that bar happened. So because previously the bar, I was thinking about there could be a scenario with a spring, but we definitely can see that there is a spike of the volume, and also there is not even a spring attempt. So definitely it's bearish. And eventually talk about the market has been factoring the 75 basis point because there's been huge drop just within 3 days. So subsequently, next day, I think, yeah, there's the next day, there's FO versus results. That's just a day before the FOMC. So there's FO versus results showing up. So I think that we could see a rally after the FOMC. But eventually, even if we get a rally, then I think we still need to judge the quality of the rally. So can we even overcome the Monday's bar, which is this big spread bar? Anyway, presence of the demand, extreme bearish sentiment, so we could result a spring of the support. But I think we all know the answer. Although we do get a rally after the FOMC, but it's not really good quality type of the rally. Okay, so what exactly is the silver lining right now? I think right now definitely is in a bearish case. For the background, S&P 500 is just right at the vulnerable spot. So what exactly is a vulnerable spot? So you can see that this is a Dow channel. So it's quite well constructed, apart from we got a bit of the fake breakout here, and after that failure, break back in, and also this is another test, so got rejected from this supply line. So I think it just respect the overbought line very much. So this is the third time it is actually testing that, but that actually makes it quite a vulnerable point because it's right at the support. So the first level of the support is right at this swing low. Is you can say that it's around 3,800, but we see that there is a break below, followed by grinding down, and then after FOMC, attempt to rally up, but fail to commit above. So that is actually very important. So it just failed to commit above this support level. So not to talk about to go back to test the gap resistance 3,900. So suggest a continuation to the downside, which is reflected next bar. And last Friday, there is kind of a doji bar here. So what exactly is happening? So you can imagine that this is sort of a support area or support level. So every time it just tested the oversold line, it just had a rebound. So it had a rebound, have a few tests, and eventually have a rebound. So it's a support based on the oversold line from the down channel. So if we can see a rally, that's great. If not, then you can imagine that should be kind of a panic sell off because it just the first time of the breakdown. So that's why it's in a vulnerable spot. So right now the sentiment is very much bearish, and also over the weekend, yesterday Bitcoin just broke below 20k. So based on Bitcoin, I think risk off sentiment should carry on to this coming week, unless we probably see some kind of the bounce off, which is currently unfolding for the Bitcoin. So we still need to see what happened on Monday for the index future. So short-term bullish scenario right now, based on the price characteristics. So out of this bar here, this downtrend. So the downtrend actually started from Thursday. So this is the Thursday bar. A failure fell below this immediate support at about 4080, and subsequently we see there's a very sharp sell-off. However, if we look closer, this is actually a shortening of the downward thrust. So the downward thrust is getting shorter and shorter. So now you see that there's the progress to the downside this much, and then subsequently the progress become this little. So I'm not saying that when we see this kind of the shortening of the thrust, it will sure get a rally up, but this is a sign of the fading of the down momentum. So suggesting that selling pretty much close to exhaustion. So there's a chance for the bull to outperform. So we need to watch that closely. And second, I talk about the channel oversold. That's pretty much here. So every time we see this channel oversold, when the price tested this line, it has a bounce off. So it has another bounce off. So this is probably the third time here. So I think combined together with the exhaustion of the down momentum, there should be a chance for the bull to perform. And thirdly, there's a decreasing of the supply. So I think that's pretty much is in line with the exhaustion of the down momentum. So that is also the bullish sign. And next is the point and figure target. So I did not include the point and figure chart here, but based on I think my first calculation is about 3,900. So you can see that first time it actually hit the first PNF target. So this is the 3,900 target. Okay, there's a bounce up, another bounce. So I think second time is the 3,650. So I think I did include the target last week. So you probably can refer back to last week video, or I think in the YouTube as well. So 3,650 is also the second target based on the PNF target. So after that, I think it makes sense for us to pay close attention to the price action. So whether there will be a bounce or whether there will be some kind of the stopping action. So, but anyway, we already seen that the exhaustion from the down momentum. So as shown in the shortening of the downward thrust, and also close to the is right at the oversold of the down channel, and also decreasing of the supply. So I think now, if we really do get a rally, we need to judge the quality of the rally as well. So the first target is definitely this bar. So that should be Thursday bar. So you can say probably is around 3,800. So if the rally is so weak that it can't even rally up to 3,800, then you can bet that it will still continue to go down. And once it's break below the swing low here, or the recent low at about 3640, so which is the low on Thursday or Friday, and also break below this oversold line, then that should trigger some kind of the panic sell-off, and we can expect some kind of the sell-off and lead to the stock market crash and capitulation. So similar to the 2008 scenario. So anyway, if we really do get a rally, I think the best case is definitely can overcome 38, and then followed by the gap resistance close to 39. So that is the bullish case. So when I say the bullish case, it simply means that we can anticipate a short-term rally. So even if we get this kind of the short-term rally, if you look at this down channel, it is still within the down channel. So it just means that we probably won't see a capitulation or a market crash soon. But if we did not even get this kind of the rally or the relief rally from the oversold condition, because right now is deeply oversold. So this kind of situation is rare. It's deeply oversold and it's right at the support, and we see the shortening of the downward thrust, and the point and figure target has been fulfilled. Although there's more downside for the point and figure chart, but I think all this could point to an attempt to the rally, for rally for the S&P 500. So in case there's a failure, means that if the rally is just so weak that it can't even test halfway of this Thursday bar, or even just go back to test 3,800 and then reverse, then we just need to prepare for the scenario where it actually, when it break below, then it should trigger another level of the panic sell-off, and that could be similar to 2008 scenario, where we see the capitulation to the downside. So it could be something like this, going down, and then eventually have a technical rally for the bear rally, and then eventually just still kind of go down. So that will be very choppy and very volatile as well. So the failure, what does it mean? It simply means that the market is so weak, because right now the market is actually telling me that it's very weak, because after this deeply oversold condition, if I look at the chart here, maybe let me bring up the chart. Okay, so here's a chart. I do have the price range. So measure from this bar. So that's the close of the previous bar. So measure from here, the close, all the way to the close on Friday. You can see is minus 10%. Okay, so this is definitely deeply oversold just within 1, 2, 3, 4, 5, 6, 7 session. So close just within 2 weeks. So not more than 2 weeks, we have already seen S&P drop by 10%. I think this is probably the sharpest drop. Definitely sharper than this. Definitely sharper than this. I think it's also sharper than this as well. So this is actually the sharpest drop. So if after this deeply oversold condition and we still can't see a relief rally, a bounce off from the support level, then the market is simply telling you that I'm so weak that I need to capitulate. I need to have a crash. So that is some kind of the scenario that it could happen if the rally is so weak. All right, so Stan say, would you call the low pointer as a selling climax and maybe followed by AR? Well, I wouldn't, because it doesn't really look that climatic to me, but probably localized or from the local context, you probably can call it, but I would just call this as a shortening of the trust, means that it's sort of losing up the momentum. So when the momentum or the selling momentum is fading and followed by decreasing of the supply and also touching the support, then I think reasonably or technically we can expect a rally up, a rebound. But how good or what type of quality is a rebound is the point, or is the key that we need to judge. So if it is very weak, then certainly it should go back, resume the downtrend quickly. If it is sort of just strong enough, maybe it can just overcome this first level, 3,800, and followed by this 3,900. Then probably I think it can still go all the way back to 41 or 42. If that scenario happen, then we could probably still rely on this trading range. So this is like maybe a sign of weakness, and then go bouncing up and down. So that is probably sort of delay the capitulation. So I think that is probably the best case that we can anticipate, the most bullish case. But even if we reach that point, overall trend is still down, and we still need to judge subsequent reaction and also rally. However, if the rally is very weak, means if it just rally up to 38, 39, and then fail, so then we can probably anticipate another break below followed by a crash. Okay, so Stan say, yeah, I think the bias is downside more. There's clear head and shoulder. Okay, so head and shoulder, maybe. Okay, so I think you refer to something like this, head and shoulder. Is that right? And then there's the break, there's the retest, there's a continuation to the downside. So, but anyway, I think we are just right at the deeply oversold condition. So even if it has a rally up, don't be too happy. In fact, we should think about where to initiate a short position, because right now everything is oversold. So not really a good point to just go in and short the market, even the index or even the any stocks. So if you can just go back up and then have a weak rally, stop right at this level, and then reverse, I think that could be a good point to enter short, whether it's just index futures or just other stocks. All right, so Stan say the rally might test the gap down. Yeah, probably. So that is the 39 is the level that I'm hoping to see of this oversold condition. So, but considering Bitcoin is probably breaking down, and if we really get another push down, maybe during the Asian European London session, then it could probably have another down, something like this, and then eventually can go up. Then I think that really is quite a typical textbook style of the shortening of the downward thrust. Okay, so I'm probably, if you can get what I mean. So the progress to the downside from here to here and to here. So in case if the bearish sentiment carry over to tomorrow morning Asian session and then to European London session, then eventually have another reverse. Then I think it's definitely the shortening of the downward thrust. So textbook style. Okay, so we just need to see whether we get a rally and how good is the rally and where it actually stopped. And eventually, if it stops right at the resistance level, I think good point to or good place to initiate short. Otherwise, if it fails, not even get a rally for some reason, maybe we got news, maybe we got some more collapse from the crypto bank, crypto company, then I think it could really just tank here and have a gap down, and then maybe it could start right away. All right, so need to pay attention to the market. Okay, so back to the slides. I think I covered this failure. Yeah, all the points covered. So next is about the market breadth. And that is also the other point that is probably at the moment is unfolding, although I wouldn't say that, well, we definitely get a positive divergence, bullish divergence, because the market is still unfolding. So right now, I can only say that we have a higher low in the market breadth. This is based on the percent of stocks above the 50-day average. So that's the S&P. So if we compare that previously, we got a divergence from here, from Fed to March. So we got a lower low here, but here we got a higher low. Okay, so this one, that is on 12th of May, I think it's one low. So this is probably 20th of May. So you can see also divergence. So we got a higher low, showed up in the market breadth, and then eventually we got a rally up. So that's a rally up. So now we still have lower low form in the index, but for the market breadth, the MFI 50 MA, we still see that is slightly higher low. So definitely is still higher low here. Okay, but until we see a reversal up from the S&P, then I think this still need for more confirmation. So that's a potential bullish divergence from the market breadth MFI, which could support the short-term bullish case. Okay, so just in case you're wondering that why did I choose MFI and not the 200 MA, it's simply because we are looking at the short term. So 50-day moving average makes sense to me. So yeah, that's the reason. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.